people who trade often inflict a certain degree of psychological damage upon themselves. They generate their own fear. And this fear comes from beliefs about the environment, beliefs that something in the market has the potential to cause physical or emotional pain. Emotional pain is usually the result of unfulfilled expectations. When expectations aren't met, a conflict forms. A conflict between what a person believes should happen and the actual market conditions that do not match those beliefs. Because of this conflict, traders begin to experience emotional discomfort. Stress, anxiety, confusion, disappointment, even feelings of betrayal. These emotions come from the gap between a trader's inner state and the reality of the market. To protect themselves, traders start building mental defenses. Defenses designed to confirm their existing beliefs and avoid confronting the conflict. These defenses often show up as denial, rationalization, and justification. But these defenses lead to something deeper, perceptual distortion. In the marketplace, perceptual distortion occurs when a trader's mind automatically reshapes or filters market information. It selectively includes or excludes details to reduce the tension between what the trader expects and what the market is actually presenting. When you distort information, you're no longer sharing the same reality with the market. You begin to experience an illusion, a version of the market created in your own mind. Eventually, the market forces you to confront that illusion. It pushes you into moments of painful awareness, where your internal expectations collide with objective reality. And even though these realizations can hurt, they rarely stop traders from chasing the opportunities the market offers. But over time, the psychological impact becomes heavy. The cumulative effect is negative, draining, and mentally exhausting. At some point in your trading career, you will need to understand this. All of us, because of our upbringing, tend to try to control market events through our perception of what we think will happen next. And then, we rigidly hold on to these expectations. Now, this is the moment where trading becomes a test of the mind. You will need to learn how to gain mental flexibility. The kind that allows you to shift your perspective, to see other alternatives, to recognize other possibilities. Yes, you may not be in a position to control the markets. And yes, you may not ever be able to control them completely. But here's the key. You can control your perception of the market. By doing so, you achieve a higher degree of objectivity, and in turn, a higher degree of shared reality with the markets. Now that you understand how our perceptions shape our trading, and how mental flexibility can help us align more closely with the market, I want to hear from you. What's one way you've noticed your own beliefs or expectations affecting your trades? Share your experiences in the comments below. Let's start a conversation and learn from each other.